Great. Well, I want to welcome everybody to our discussion this afternoon. I'm pleased to be joined here by Afsaneh Beschloss, Tyson Pratcher, and Ari Nachmanoff. And we're looking forward to having a conversation around the topic of climate and sustainability in the post-COVID world. Clearly very topical areas for investors these days as they think about not only near-term strategies, but in particular, the mega trends that we are expecting to see really impacting not only portfolios, but the world in the coming years. Afsaneh, I'd love to kick it off with you. Given Rock Creek's work with many leading investors, given your all-star advisory board of people from industry and finance, what are you hearing generally about the level of concern regarding the risk, but also views towards the opportunities, and how is Rock Creek sort of advising its clients in this regard?
Lance, thank you so much. And you and I think, have been in this world of climate-related investments for more than 20, 25 years. And I don't think we should talk in greater detail. It gives away our age, I think. But in terms of the whole climate area, I think it was really interesting. Last year in January, before COVID hit, it was the biggest topic at the World Economic Forum. And very importantly, as we looked through the 2020 and to this year so far, it's been really one of the most important areas for investing, whether it is in the US, you see it in the new Biden plan, you see it in Europe as a huge part of their infrastructure and economic recovery plan post-COVID, and in emerging markets where the largest growth in energy is coming really from a marginal point of view. You see a huge interest in renewable energy. I think what has happened, which is really important, is the fact that renewable energy and climate-related investments are something that you can invest in, and they're going to have high returns and compete with all other kinds of investments. And that's why I think a lot of global investors are interested.
And indeed, I think I'd love to really dive in more to the climate side, but just for a moment, sticking with sustainability more broadly. Rock Creek obviously was an early signatory to the UN Principles on Responsible Investing. As you look back on how investors have had to respond to the many challenges associated with the pandemic and economic turmoil, do you feel that that has strengthened the resolve of investors and the commitment to ESG, or have you seen that undermined in any way? And what do you take on that going forward?
Lance, what was really interesting in one of the first calls we had with some of our largest investors post March, where our concern was that they're going to forget about climate related and just stick with sort of the urgent issues. Some of the first questions were, I hope that you're staying focused on climate investments, and when is this climate fund coming to the market? So I find that whether it is the investors that we at Rock Creek work, or the board that I'm involved with in terms of the nonprofit world, or really a lot of the other people who consult with us or get our advice, everybody has a very sustained interest in this area. And that, if anything, has increased really as a source of return. Just think about it. If you look at a set of stocks in renewable energy indices even, or if you look at private companies investing in renewable area, their returns have been so much higher, even with a little bit more recent spike in traditional energy prices. They're still very competitive, and they're very, very high return. And of course, the news of the Biden presidency got a stock of the renewable stock index to go up even more.
Indeed. I want to come back to that in a moment, but you've mentioned returns a number of times there. Tyson, I know you have your ear to the ground quite closely in this regard. What are you seeing or hearing in terms of investor expectations and returns? And do you think they see ESG as a trade-off in that, or actually a complement in some way?
Yeah, no, that's a great question, Lance, and I think that there's been a pretty significant transformation in the way that people, particularly institutional investors, view the space. you know, if you go back kind of 15 years or so when I got kind of started in the business, there was this view that there were institutional investors who really cared about it, but saw it more from the angle of being kind of, you know, it was a socially responsible thing to do, not necessarily, you know, in the best, but as a fiduciary, maybe they had some pause. And I think that what you saw is many people who really cared passionately about it just said, you know, the general consensus is that I can't produce the same kind of return here. And so while people like, you know, you and Ari and Afsani may have been, crying out in the wilderness, and that wasn't the case, I think that was generally the way people viewed it. You fast forward today, and particularly what you've seen over the last few years, as people say, hey, but what I will also say is that back then people said, hey, in the long run, that's probably right. In the short run, I'm just not sure. And I think that what's happened is that today is the long run. And now there's data. Now we've seen it. And you can, you know, and you can see that many people, particularly if you look at private markets, there's a real belief that not only is it additive, but there's real multiple expansion to be had from companies that are able to do things like take an oil and gas company, make it more renewable. People think that probably adds multiple turns to what you can sell it at. And so I think that you're seeing not only the institutional investor community say, you know, get to the place where you guys have been a very long time, but also asset managers are saying, hey, this is a great new place that we really need to be paying attention to. So I think that, you know, the upshot of all of it is, I think from a return perspective, what people will ultimately see is a return that they believe is in line with what the asset classes that they're in, whether it's public markets or private markets. But I actually believe that when you talk to people, particularly investors, there's a real belief that the returns may end up being a little bit better. It's like everything else where there's a little, I would compare now, and I'll stop here. I'll compare it to where, a decade ago, there was a lot of talk around whether, software investing was niche or not. So it sounds like it's an interesting, that people are going to need it. And there were some people who'd really specialized, who'd been doing it for 20 years, and then all of a sudden the dam broke, and then everyone said, of course, it's needed everywhere. And now everyone is, and I feel like there's this similar inflection point where there are people who've been talking about it for a very long time, and now the dam breaks, and people say, this is something that you have to be doing if you're going to be a responsible fiduciary to capital. So, and so that's where I think that the market is today.
No, interesting. Ari, I'd love to get some of your perspectives on the private market side, but maybe to help us transition into that, Afsani, one follow-up question with you. You mentioned the Biden administration. So, clearly that's a major topic today. We have the new administration coming in. The president-elect has announced a climate czar. They've announced the opening up of a new White House Office of Domestic Climate Policy. So looking at the potential for increased US leadership in this regard, how do you see that impacting the global conversation around climate? And also, how do you see that potentially impacting investor strategies as regards to climate?
Lance, I think what is going to happen is the US is going to go back and join the Paris Accord in terms of agreements and multilateral agreements. US obviously was out of those discussions in the last 4 years, but as Tyson was saying, what has happened in the last 4 years, regardless of the public sector and the government position on climate, the private sector has moved a lot and basically has taken the lead on climate-related investing, whether it is airlines, whether it's the energy companies who now call themselves energy companies rather than oil companies in order to survive, whether it is the renewable business where we've seen a huge number of venture investments. And I think what you're going to see a much closer collaboration between the public sector and the private sector also in the US, as there's so much need for new project development. And even as we saw in the last year or two, some of the biggest projects were getting built in Texas, in the Middle East. and in Morocco. And I'm sure Ari will tell us about a lot of the other projects that he has worked on. But I remember a lot of the renewable projects that I was studying a number of years ago at the World Bank have finally come into fruition. And you, of course, have been one of the largest investors in the renewable space yourself, Lance. And I'm sure you've seen a lot more. So I think what we're going to see is in the US a lot, but also in Europe and in emerging markets, a lot of new projects go ahead.
Yeah, no, thanks. And in fact, I'd love to comment on that, but Ari, you've been quite patient so far. I know you're working with Rock Creek and the launch of their climate fund. As a long-term energy investor, someone who specialized in renewable energy, I mean, what have you seen as being some of the key changes in the landscape over the last many years? And then how do you see that playing out in the coming few years ahead of us?
Well, thanks, Lance. Great question. And just to follow up with what Afsaneh was saying, you know, we've seen the U.S. step back, you know, from a public policy point of view in the last 4 years. But the thing about it that has made it palatable or not a complete tragedy is that happened between 2016 and 2020 rather than a 4-year period earlier on when the technology was more in its nascent period in terms of renewables, et cetera, where it could have done tremendously more damage. And we've seen as well on the public policy side, just on the US, states and cities really pick up the slack with providing incentives and regulatory guidelines that continue to push for renewables. And even in red states in the US, we have seen governors, you know, Republican governors and administrations push renewable policies in the last 4 years, sometimes very quietly because of political situations. But a lot of progress has managed to happen despite the federal lack of appreciation of the climate issues. I would say, going back to what Tyson was saying in terms of where investors are coming from, we see it from the investment point of view, and having been in the energy investment, you know, sector for the last 30 years, we've seen it in the economics, on the project-specific economics of the competitiveness, where during the 90s, our group was at the forefront of converting the grid from being primarily coal-fired to natural gas-fired, and the technologies developing there, providing parity for a cleaner fuel, a bridge fuel, obviously fracking and the availability of gas increasing in the United States and around the world. But now in the last 5, 10, 15 years, we've really seen a very dramatic increase in the competitiveness of the renewables, solar and wind, so that, you know, even in the last 10 years, 60 to 80% reduction in costs. And looking forward in terms of the technology and the competitiveness for renewables, it really, the next big sector will be in the battery, in the energy storage sector. And there's, that's another space where we see the next big chunk of efficiency coming out, so that, you know, renewables, obviously, you know, energy is required when the wind doesn't blow and the sun doesn't shine. However, battery storage is the next frontier and is just at this moment approaching the competitive level that it needs to be to make renewables, you know, the dominant force, not just for new energy additions, but over the grid as a whole. You know, in the US today, might be surprised some people given how much they've heard about renewables. It's still 60 to 65% fossil fuel based generation in the US. And so there's a tremendous amount of work still to do just on that sector alone.
Yeah, no, I think that's certainly true. And maybe I can complement that looking at the international perspective as well. Afsaneh, you mentioned the work, you know, we've done at IFC, the private sector arm of the World Bank Group. You know, I lead our energy and investing, infrastructure investing. We've invested about $6 billion in renewable energy over the last decade, over 200 renewable projects, 15 gigawatts. So there's been tremendous progress in this area. But I think just as an example of how much we've done and yet how far there still is to go, you know, I look at a country like India, 4th largest country in the world in terms of renewable energy today. So, you know, quite advanced. they have invested actually in about 50 gigawatts just over the last 5 years alone. We invested in a company called Azure Power, very early stage. It's become one of the leaders in renewable energy in India. It went public on the New York Stock Exchange and is currently trading at 5 times what we've invested at. The amount of investor interest globally in this space has become quite tremendous. Having said that, notwithstanding that, and many other companies like that, India today is at around 24% renewables in its total energy matrix, and they want to double that over the coming decade. So as much progress has been made, there still is so much more yet to be done in terms of capital required, know-how to be deployed, et cetera. So I think that's quite significant. Or maybe coming back to you, you talk about some of these trends. We're seeing, I think, multinationals, we're seeing big oil make these big announcements about trying to shift. Unclear maybe how much that's substance, how much it's a bit of PR in the mix. How do you see in the private markets the role of private equity, for example, and how do private equity players differentiate their strategies when it comes to climate?
Yeah, as you said, there's trillions of investment that's required, and that will happen, and so it has to be, it's the role of investment management and private equity players to try to find the best possible homes for capital to make the best impact and to maximize returns, and to differentiate there. I think that private equity a lot of private equity in the space. Certainly when natural gas was the king, a lot of innovation was in the financial engineering innovation. Once the sort of the technology became commoditized, et cetera, with combined cycle generation, being pervasive on the power side. But I think going forward on the private equity side, there's a lot of room for innovation. There's still room for financial engineering innovation, but there will be a lot more of a role for innovation in the story of electrification. So we talked about renewable power expanding as a percentage of the grid, but on the other hand, there's a tremendous amount of work that needs to be done to electrify the transportation sector, electrify the industrial sector, electrify in the agricultural sector, and to create impact investments there that complement what's happening just on the pure renewable infrastructure center. So I think that that's going to be a key area. So it could be services, it could be manufacturing, in addition to just renewable infrastructure itself, as a way for private equity to add value in this area.
And it's interesting, and again, I think coming back to this theme that we have again the new U.S. administration coming in, announced the major plans, building back better, with significant ambitions when it comes to infrastructure. How do you see the private equity potential role in that, and where investors can make a difference?
We're very excited about this angle in particular. There is a strong feature of the Biden plan that gives great weighting to environmental justice, which is something that is long overdue in many communities, where both in terms of economic effects, but also in terms of health and environmental effects, have been disadvantaged. And we're in particular, for example, we're looking at a project, investing in projects in the Southeast US that are located near old coal-fired facilities that will be retired over time. And many of the communities around there, were facing environmental disadvantages, and renewable projects in those areas would, I think, very much be welcomed in the local economy, but also in terms of they make sense economically and as far as the infrastructure, because there is great existing infrastructure there for the coal-fired plants in terms of transmission and distribution. So it is a win-win. And as the Biden administration is favoring development in those areas, we're very excited to participate there.
It's interesting. Afsani, coming back to you, again, with Rock Creek's launch of this climate fund, I guess I'm curious, one of the things I've heard from investors is the worry that when they hear ESG, when they hear climate, that's somehow code for lower returns. I'm curious how you see it. How do you respond to that? And as a firm, how are you generally approaching this?
I think Tyson also touched on this, where in literally even a few years ago, you would have people's eyes glaze over if you mentioned the word, sustainable energy or anything like that. And I think that is the big change literally in the last 12 months, where a lot of the data and the numbers are coming out. And what you're finding is, for example, you went through this stage where climate-related investments were going on. People like you were doing a lot. A lot of the Europeans were very involved. They're actually already into hydrogen and far ahead, as our friend Petter Nora, who's working with us, has talked to us about it. But really, the average person or the average investor did not believe in this area. And then you had, of course, the losses that people like Kleiner Perkins and others made on the early venture part and the early tech part of renewable energy. We really moved away from that, where a lot of new technology has made energy efficiency and renewable energy very economic, as Ari was talking. And so the returns in this area are much more like any other private equity, depending on whether you're at the private equity end or the infrastructure real asset end. It competes with any other investment that you're making, if not more. So I think it's not just a question of contributing to a better climate, which people really care about now that we are in the middle of the COVID situation and people have realized that clean air does have a value, but it is really beyond that, where the returns completely justify the investments in these areas. And that is not only in the early stages of the projects and project development, but also a lot of the services related to climate-oriented investments. What do I mean by that? It is people like people around this table with the kind of expertise, they're in short supply. The very few people who've been investing for 5, 10, 20, 30 years in renewable energy, and we have some of them around this table. We have very few people who've been involved in some of the technology part of energy, who've gone through the different cycles, good and bad. So I think that's again why investments in water, in waste, which and waste energy and efficiency, as well as energy production, is so interesting right now. I think we all are getting letters from our utility companies asking us to check the box as to how they will be sending us energy in future. Plus, look at what happened with the Tesla stock. I mean, what does that mean? And Ari was talking about the EV and the battery life and investing in batteries, but look at what's happened to that. So it tells you something in terms of where we're headed, and we're headed there very fast, as Tyson was saying.
Yeah, absolutely. In fact, Ari was mentioning the challenges when it comes to looking at the extent to which renewables have penetrated into the grid, but yet has so far to go in transportation. It currently represents less than 1% of the transportation industry, and yet we're hearing that we could be seeing 500 million electric vehicles on the road globally within the next 10 years. You mentioned water. I think the forecasts I've seen are that over the next 20 years, we're going to see demand for water growing by 50% relative to where it is today. And that just represents an enormous strain on the global resources, and yet obviously a critical resource when it comes to industry generating economic growth, as well as just basic human life. I'm curious, clearly this is a global problem. It's going to require global solutions, and yet often we see investors being a bit more provincial in their strategies. They're very focused, for instance, on the US or sticking around Europe. How much do you think investors are going to be interested in investing more broadly, internationally, allocating, as part of the, contributing to the solutions here?
In my view, I don't know what everybody else thinks, is that investments are really global. There are some people who are investing only in emerging markets because that was the only place where this was happening. There are those who's, doing investments just in Europe, and now more recently in the US. I think a lot of these projects are interconnected, and so if I had to guess, you're going to have much more global investments looking at all the opportunities in US, Europe, and emerging markets. And that's what we're doing at Rock Creek, looking at climate investments across the globe. And we obviously have the comparative advantage in all of these constituencies.
I think that Afsani really hits the nail on the head. And I think that the evolution, right, is kind of something that we have seen happen in other places, in other asset classes, right? If you think back 5 years ago, the way people would generally express their view in the spaces, they would say, hey, let's create baskets of stocks or companies that we're not going to invest in. So we're going to avoid this. Today, they've kind of gone from that defensive posture to being more offensive and saying, hey, let's find things to invest in. And a lot of that begins by investing where you are, where you feel more comfortable in that geography. But ultimately, it expands into a much more global position, as you've seen in every other asset class, whether it was private equity 25 years ago or 30 years ago. Institutional investors were very focused on local, how could we possibly invest in Asia? You're going to see the same kind of, I think, arc, although I'd argue this one's going to be much faster because the world is much more integrated today.
I, for one, hope it's much faster, Tyson. Lance, we're currently looking at a project actually in Mexico with an Asian solar panel manufacturer who's one of the top 5 manufacturers around the world, and they have plants that they've developed around the world. And if we can make the right arrangement on this first one, there's 7, 8, or 9 others in the US and Europe, but also in plenty of other geographies around the world that could be quite interesting projects to invest in, and an ability to replicate the value add across various geographies. So I'm hopeful that the investors have a little bit more open mind of doing investments not just in their backyard, but that it's more of a sector and looking at the projects on their value themselves. And have it be more, where can we go rather than, where won't we go?
Yeah, no, absolutely. Great. Well, look, I appreciate your comments on this. I think it's been a really interesting conversation. And clearly, this is something I think the whole world is going to be watching in the coming years. So just want to thank you again each for your comments and wish everybody the best of luck.